Looking at 37 mining companies, 80% of which are listed on the JSE with a market cap of over 200 million rand, the survey found that annual revenue for the key mining commodities was 351.3 billion rand in the year to June 2014. That was just over 6 billion rand on the year before. Commodity prices denominated in US dollars have largely been on a downward trend in the time under review, but the weak rand helped cushion SA-based miners somewhat.
The weaker rand that we've seen in the last 12 months has certainly shielded many South African miners from some of the impact of those lower commodity prices.
The benefit of the weak rand, however, is expected to be short-lived, given the fact that the weaker currency will mean higher costs in the long run. The report found that on average, earnings before interest, tax, depreciation and amortization margins stood at 28%. It concluded that these were not sustainable levels, given the need to reinvest in the business for growth. PwC suggests that something's got to give.
Many out there would say that commodity prices are largely beyond the control of mining executives out there. So executives have to control what they can control. And the first place where investors are pointing out to is costs.
The suggestion is that some miners may have to consider restructuring their business, as Anglo American is doing with its platinum assets in Rustenburg. The report found that the market capitalization of the JSE mining index rose by 78 billion rand in the year to June, but noted a decline of 130 billion rand between June and September this year, suggesting a lack of investor confidence in the sector. It says all stakeholders, including shareholders, labour and government, need to be cognizant that investment in mining is a long-term play and that their short-term interests should not be so overwhelming as to scupper the long-term potential of the industry. Nompumelelo Siziba, SABC News, Johannesburg.